Textile stocks are in focus, Raymond in particular, a textile, a retailer, now a real estate company as well. So lots happening over there. Pull up the last 3 months, 6 months of Raymond and you'll see what I'm talking about. Today we have the CFO of the company to talk lots of interesting things. Amit Agarwal is joining us on the show, and recently they have spoken a lot about real estate, have even carved it off. Amit, thanks a lot for joining us. Talk to us about what essentially is the idea as far as carving it off is concerned, and of course a lot of other announcements on real estate, foray into commercial as well, no longer purely a residential play, your funding plans in realty. Talk to us about all that.
In terms of funding, as I talked earlier as well, that the whole focus for us at this juncture is that we want to grow this, and there are different pools of capital available in different segments. So, we believe there is a certain amount of capital which is available for the real estate business and which we will tap into. So, that is one of the other reasons we have created this subsidiary, so we can tap into it, and over time who knows, there are enough and more ways of monetization. One can consider various things.
Amit, you have also announced a consolidation exercise for your engineering and tools businesses concerned, all bringing under one roof. Talk to us about that.
It's a very attractive business for us. The engineering business, if I talk about composite, it consists of tools and hardware business as well as auto segment. If you talk about tools and hardware business, we have got a file segment. In the file segment, we have a lion's share in the market. We have controlled 65% market share in the domestic, and globally we control almost 22 to 23% market share globally. And in terms of auto, if I talk about the ring gear business, which to the likes of the big OEMs, we have 60+% market share in these businesses with the major OEMs, be the Marutis of the world and the Hyundais of the world in India. Now, we also export significant quantity. Now, the whole idea between the two is, when you have consolidated into an engineering business, there are a lot of synergies. In both the places we buy steel. Now, we will be able to buy the steel together. In terms of logistics cost, as both the businesses put together, almost 50% is exported. So, in that export business, we have the ability also to export. Terms of logistics cost negotiation can be done very easily. Third thing, we have tapped in so far in the files business most of our distributor led model, which is a do it yourself consumer business. However, the auto side is more an industrial. So, we believe there is a significant opportunity for us in terms of market growth. So, with that consolidation, I think there is a significant synergy which we want to unlock over the next few years.
Amit, we also understand that you are considering an IPO of this business, a fundraising plan, now that you have bought files, engineering tools, all of them together under one roof. Can you talk to us about that?
We have said very clearly, we have consolidated this business to achieve synergies, and over time, because the two businesses put together will get a scale, and when you get a scale, your ability to attract different forms of capital becomes easier. So, therefore, what we have done is we will consider this consolidation to get synergies, and over time we will consider monetization of these assets as well, where you can have different forms of capital, be it the private equity, strategic partners, or any other routine form of capital which you can get into.
Right. So, you are actually endorsing our story that fundraising and value unlocking is on cards for this business. It could be via many routes. Do you have any timeline for this IPO?
It is little too premature for me to talk about any timeline, but we have shown very clear intent that the idea will be, these are actually a debt free businesses, free cash flow generating, significant free cash flow generating business. So, for us, what we intend to do is, by monetization, repay certain debt which is at the Raymond Limited and deleverage the balance sheet. When you deleverage the balance sheet, there is a significant unlock of value which gets created for our large set of shareholders. So, for us, that is a primary focus with which we are working on, and we believe that it is something which we are very clearly defined to do. Because for us, deleveraging is very critical. if you see our demonstrated performance in the pandemic year, fiscal 21, we have been able with our own internal resources, working capital management, as well as cost reduction drive, that we could cut our debt by 450 crores. So, our net debt has reduced to 1400 crores as of 31st of March. And if I talk about, let's say, in the last 6-7 quarters, we have cut down our debt by over 1000 crores. So, very clearly the focus of the group is to delever the balance sheet and create larger stakeholder value, shareholder value.
Right. And lastly, I want to understand what's your plan on consolidating the B2C business as well. What are the trends you're observing there?
Yes. So, as I talked about, there are two things. One, in terms of steel buying, we believe that once you consolidate, you will expect an improvement in the steel buying price. Second thing, in terms of logistics cost, you will have that significant advantage. Third thing, in terms of a market, which will take little longer to unfold, because you will have to go to that customer, have them. I am very proud to say today, where am I sitting? It is the library which houses the books which we have been in the business of textiles for last 75-80 years. You know, there is a beauty to be in this place, and that shows the legacy and the history of the company. So, we are very focused on the B2C business. Now, for us, the whole idea of fabrics into both suitings and shirtings, we all know very well that today an Indian man, he has an aspiration at some point of time in his life, he would like to wear a Raymond suit or a Raymond fabric. In that regard, it is directly a B2C business. What we were having was Raymond Apparel Limited, which was a 100% subsidiary of Raymond Limited, had the iconic brands be the Park Avenue, Raymond Ready to Wear, Color Plus, that was housed under that, and they were selling the products. What we have done is, as we had envisaged earlier in the part of a demerger process, that we have consolidated all our B2C business under one umbrella, which is under the Raymond Limited. In that, the big advantage what you are going to get is 3 or 4 things. One, there is a lot of sourcing which can happen of the fabrics which gets converted into an apparel. That is number 1. Second thing, if you see our distribution network, we are proud to say that we are the company who has got over 1000 stores or 1500 stores rather across 600 cities. So, that network, now if you combine that force and the way things are happening and the consumer sentiment is back into the market, we see by consolidating the two, you will get a lot of savings on that.
All right, Amit, we'll let you go on that one. Thanks so much for your time, and thanks for confirming our news break that value unlocking and fundraising in engineering tools all under one roof now is on cards. It will happen over time, and private equity, IPO, etc. would be utilized to raise funds and reduce debt.